Hello everybody, welcome back. So let's have a look at Bitcoin, shall we? And I have absolutely no change in the way I'm viewing this market right now, which is one of further downside for the for the next big move. Really, is probably further downside. We could be entertaining realistically a retest of this 200 exponential. It would be known as a bearish retest of a death cross. We've got an exponential death cross here, we've got a simple death cross here. Death crosses basically on the 4 hourly, and just like how you have golden crosses form and then you move up and then you come down to retest those, retested the simples here, retested the exponentials here, you'll be looking for the same sort of deal to take place on a 4 hourly after a death cross. So a bullish retests of golden crosses, bearish retests of death crosses. So we'll be looking for that at best. And so if that's the case, we're talking about a 4% move maybe from where we are right now, 4 or 5% move. Yeah, 4.5% move at best. The momentum still continues to move to the up. There's no bearish divergence on this continuation of this small uptrend. But another thing to be slightly concerned is that since we've been in this little run, we've had bad rejections from Bollinger Band tops, especially recently. Up here, bang all the way to the 50. Up here, bang to the 50 again, bang to the 50 again, and then a big breakdown. So this time around, there's no real moving averages below us. So you'd have to look at simple horizontal supports. We've already got one down here at 20,800. That's backed up by these areas around here, but we've had a nasty breakdown. It doesn't feel nastier at the moment, but it kind of is. If you think about this in terms of a support trend line, really, which again it's not very neat, but it kind of exists. You could also argue that this has been a channel of some form as well. Upwards channels like this, rising channels, have a habit of breaking to the down. They're technically bearish formations, when you have something as clear as that and as narrow as that. So it's broken down from that already, which is bearish. And again, we're below pretty much the major moving averages on the 4 hourly, and obviously on the daily we'll be below all of them. So look, all of this points to further downside. Where's the 21 exponential? 21 exponentials at 22,400. So fair enough. Everything generally points further down. Now I've got all these people I hear talking about midterms in America. Oh my god, the midterms, they're definitely going to be bullish. Why? They just are, okay? Trust me, man. Trust me, bro. Well, I can't trade off the back of a trust me, bro. It's like going into a bookies and saying, I'm going to place a bet on this horse. It looks pretty good. And then some bloke sneaks up behind you and goes, don't bet on that one. You'll probably win based on the odds, but I can tell you now, I've got inside information on something. And so, what's that? Well, just trust me, bro. This other horse, this three-legged horse over here, the one that's on the floor, the one that's dying, basically, it's going to work out. Says, well, why? Trust me, bro. No, I can't go with that. I have to go by the charts. And so that is just your Bitcoin chart that I've presented to you here. So let's have a look at the traditional market charts here. So we'll talk about that in just a moment. So we're forming what appears to be a anemic bounce from the 10 exponential over here on the Nasdaq, right? Fair enough, but we're back within this descending triangle. We're lower than the cells that I put in at the top of the triangle. So bought the bottom, sold the top, bought the bottom, sold the top. That's how you do it, really. Right now, as we're still back within the triangle, we definitely run the risk of coming back down to these lower zones. I'm not feeling it. I'm not in it. Like, if it moves up, it moves up. It's still a series of lower highs and lower lows. And so if that's the case, we could be forming a lower low back down here. Remember, the Nasdaq is still quite a decent looking chart. This is your pre-pandemic top. We've not even retested it. Most stocks have not just retested it, but they've actually gone lower than the post-pandemic low. So let's just face it, this is a bearish formation. We're back within it, and that is that. The only position that I am in is oil. So buying, or just say buying, longing this bottom here on this wick. We are moving up from it. What can I say? What can I say? So it's the only position that I'm in at the moment, outside of certain hodls that have been very, very, very long standing. We'll be looking for this to move up to at least the 21 exponential, which is just short of $100, and then probably, if that breaks, straight up to 104, 105, which is a fair bit of support stroke resistance around here. And if that breaks, we go straight back up to the top, which would be in keeping with the measured move. I wouldn't be holding my position up to this level. I'd be scaling out of my long from from $99 a barrel, and then 104. But if we were to be doing this, we'd be back up above 120, which is where we call the top on this. price and the bottom on stocks. Again, the everything bounce. Now we're looking for the inverse sort of thing to happen. Not quite as dramatic, I would imagine, but it's still the inverse correlation of energy to stocks. And the only thing I'm willing to play would be the energy side of things, especially as we approach winter. The demand is going to be higher for oil and natural gas. We already see the energy sector sort of moving up throughout all of this. It doesn't really matter what Europe are doing. There's reasons behind the charts to back up why higher prices are going to be most likely as we approach the fourth quarter, right? It's going to be a cold one. It's going to be cold. So let's just face it. Oil is going up to at least $99 a barrel with an eye to about 104, 105, and let's see where we go from there. And like I say, that's called the everything drop for commodities and everything like that. Not for commodities, probably the everything bounce for commodities and energy specifically, and the everything drop for stocks and crypto. And that goes to the bearish September that people refer to, which I'm more inclined to believe because you can back that up by looking at the charts. The charts always show a bearish month for September. And so it's slightly hocus pocus because it's not particularly based on anything other than a month being bearish, which is a bit weird, but I'm going with it because the overall general direction is down on the short-term time frames. On the long-term time frames, offer further downside. So, and the last thing is alts. Obviously, altcoins. If you're buying altcoins at 40% dominance, you're mad. Basically, you're mad. There's just madness, right? Unless you've got something that you want to buy for a very long-term position. You're mad. From a trader's perspective, this is pure madness to think about buying into any altcoins here. This is the exact time that you'd want to be exiting those altcoins, and the only thing you would really want to entertain buying at this particular moment would be Bitcoin, which we've already established is most likely going to go down. Most likely going to go down. So yeah, right, that concludes today's live stream. I mean, it's not a live stream. The live stream is tomorrow. I've got more videos coming out the weekend because I'm not going to be around here, so I've made some videos in advance which are a bit more long-term time frames, and actually they're pretty bullish, and obviously they should be bullish because we are approaching the last stage of this bear market. This is where opportunities will be rife. You've got to make your plans. This is to help you make plans for whatever a strategy. Mostly this is from an investment perspective strategy, and what where you'd want to buy things, or not so much buy stuff from, but where you'd want to stake things, I suppose, and the general outlook of the market over the next 3 years. So we are looking for some serious bullish stuff, and I'm actually very bullish on altcoins, mostly because in a nutshell, look at this chart. We've been in a bear market and we've stayed at an extremely low Bitcoin dominance, which shows that there is strength in alts. It might not feel like it as they're 99% down or whatever, but there's still strength in altcoins. And so if we can sustain a bear market and not have a massive rise like the last one we did, which basically went all the way up to here by the time the bear market hasn't even finished. It's basically where we were last bear market. We'd gone up 75%, and we managed to close as the bull market began around 50% up. At the moment we're basically back down to where we were when the bear market began as far as dominance is concerned. So congratulations altcoins, right? They are doing pretty well as far as exceeding expectations. It could have got a hell of a lot worse. But let's face it, the bear market's not over yet, and so I would expect worse things to come. But altcoins are definitely a different kettle of fish this time. They're a different bag, and we should be bullish on them in the long term, moving into the next bull market. So there's plans and preparations that you might want to think about doing as an investor. Because hodlers generally work out quite well if you hodl the right thing from the right point. Time in the market and timing the market is the best of both worlds, and I suppose from an investment perspective that's what you really want to do. You want to time the market, but mostly timing. You want to spend time in the market. So if you can do both, then absolute beauty. I mean, let's put it this way. I bought Bitcoin when it was about 3,800, trying to time the market, and I spent time in the market. The store of value makes sense for me, as I can see my value has been stored over that period, despite the ups and downs and the sidewayses. Same with Ethereum. I bought Ethereum $160. Timing the market and time in the market, both being my best friend. Still, store of value still remains true for me for those two purchases, to which I have never sold. Works out very well if you're able to time the market and spend time in the market. So this is what we're looking to do as we enter the next stage of the last stage of bear market. So just be prepared for the lower prices and get ready to time the market to then spend time in the market. Anyway, It's enough of that. Have a nice day, everyone, and I'll see you tomorrow, and live stream as well if you want to join the Patreon. We'll do that tomorrow as well. Take it easy.